The first thing I want to cover is the fact that Trump is now going to meet with Putin and discuss an end to the Ukraine war. He is slowly and surely becoming the president of peace. And although war is good for business when it comes to the military-industrial complex, peace is good to provide certainty for markets. Now, Trump's description of his call with Putin was productive, which appeared to dim prospects that the U.S. would send Tomahawk cruise missiles capable of traveling 1,000 miles to Ukraine. In recent days, he has signaled publicly and privately that he was leaning towards providing the missiles, according to two people familiar with the discussions. Now, Putin warned Trump during the call that supplying Kiev with the missiles won't change the situation on the battlefield, but would cause substantial damage to the relationship between our countries. So if Trump wants peace over there, he's likely going to have to hold off on sending those Tomahawk cruise missiles. Either way, the Hungarian Prime Minister Viktor Orban stated that he spoke by phone to Trump about the meeting in his country, and preparations for the US and Russia peace summit are now underway. So no matter what they're going to be meeting, the real question is, will this actually solve the problem and provide much needed stability in the minds of major investors worldwide? Moving further into the global scale, a growing glut of oil and fear of global economic slowdown have pushed US crude prices to their slowest point since fuel markets were rebounding from the COVID crash. The decline, again, and I mentioned this at the beginning of the video, is good for American consumers because that means cheaper crude port ends, lower prices for gas, diesel, jet fuel, and heating oil. And again, virtually everything we buy and consume gets to our supermarkets and grocery stores using oil. But it is an alarming situation for the US oil industry, already beset by narrowing profit margins and shredding jobs by the thousands. Now, I don't really care about this as much. At the end of the day, there's always going to be money in oil, and even then, our own government is going to support it because it is necessary to running a global economy of scale and just even the United States economy. But at the end of the day, this is a signal that there are fears and concerns about a slowing down economy where consumers are not able to spend as much as they used to. Again, we are starting to see higher unemployment and less jobs available. Now, my personal opinion is we're likely not going to see an end to the conflict between Ukraine and Russia. And since markets are already used to that environment, I don't think this is going to play that much of a role moving forward, but I think it would be really cool. And arguably, if this did occur, it would actually probably provide a bit of a market pump. That remains to be seen. That includes the fact that oil prices now dropped to their lowest level in nearly 5 years, basically going back to the early days of the COVID era. And yes, lower oil prices are actually good for an inflationary environment where prices will actually come down, because you really have to think about how substantial and systemic oil is for imports and exports and virtually everything you and I do. So lower oil prices tends to mean lower prices in everything else. But this is a dual-edged sword, because lower oil prices also means that demand is actually dropping for oil if they didn't continue to increase their output. And lower demand for oil means less spending from consumers, probably because they don't have enough money to spend to begin with. Finally, in terms of oil, this is like a 50-50 thing. It's nice when we see oil come down, but it's an indicator that the economy is not doing as well as we thought it once was. So this is where you have to bet with the trend. If the trend is down, you usually want to bet to the downside. If the trend is up, bet to the upside. And over the long term, the trend has been up and we are holding some key levels and supports, but that could change very quickly in the case of another little dump like we saw recently, which was actually one of the largest liquidation events in history. I don't know if we'll see something like that again, but here's what I do know. You need to prepare by doing great risk management. Right now, any positions I'm personally taking, I'm setting a tight stop because I don't want this type of a situation to get worse and for markets to continue to sell off in panic. Now, that said, one of those companies that isn't currently panicking at all is Ripple. They have consistently sat on boatloads of cash, and yes, they've sold plenty of tokens along the way in order to continue to acquire major companies. One of the last ones is a leader in treasury management called G2. Treasury. And many of you might remember that not too long ago, they acquired another company for one of the largest acquisitions of its kind for $1.25 billion dollars, a prime broker called Hidden Road. This is another massive acquisition. Very few companies can afford to make these types of acquisitions for companies of this scale and size, but they did acquire G Treasury. This deal marks significant expansion for Ripple, immediately opening up the multi-trillion-dollar corporate treasury market and access to many of the largest and most successful corporate customers. G Treasury brings over 4 decades of experience supporting treasury operations for the world's most recognized brands. So guess what? If you can't go and build an operation of this scale, well, a Ripple is simply going to go and buy it, which is ultimately going to be very positive for the Ripple stock and any of their shareholders. However, we're not seeing it really reflect in the price action of XRP, because you have to understand XRP is simply an asset on their balance sheet, and yes, they can use it to sell to do acquisitions like this. And XRP is more so at the mercy of the general market. So for far too long, and this is actually a statement from Brad Garlinghouse, money has been stuck in slow, outdated payment systems and infrastructure, causing unnecessary delays, high costs, and roadblocks to entering new markets, problems that blockchain technologies are ideally suited to solve. So guess what? They're probably going to start to integrate portions of the XRPL into G Treasury in order to service their corporate customers for trillions of dollars in treasuries. And again, although that is very positive for Ripple, it doesn't seem like it's going to affect the XRP price right now. We always see really great and positive news, and you have to understand now, at some point in time, if the news isn't enough to push the price of that asset up, it's likely already priced in. Now, when we look at the Bitcoin exchange liquidation map over a 7-day period right now, you can see that we still have the majority of traders levered short. In other words, we have about $14 billion of shorts, while we only have $2.5 billion of longs, which means right now the bears are still in control, with Bitcoin sitting at a price of $108,000. If something like this were to continue to grow or stay the same over the weekend, we're likely seeing new local lows, and this could potentially be the end of the bull market. I don't think we are there just yet. However, we do have to practice good risk management. When I look at something like XRP, very similar. We have far more traders short right now to the tune of 368 million versus long at about 137. So if Bitcoin continues to dump, so will XRP. And right now, XRP is failing to hold a support right up here at 275. As you can see right here, this was our support. Not only did we bounce right back up to 267, we failed to reach the 270 range in order to act as a resistance. And already we're seeing resistance at about 260, back down to 230, which leads me to believe this thing is likely going to continue to go lower, and our next support would be somewhere here at the 224 to 225 range. Whereas Bitcoin looks relatively more strong, consistently holding at between 108 to 107, which is its support, and acted as a resistance for quite some time, going back to December of 2024. So Bitcoin absolutely needs to hold this range in order for the crypto market to be looking healthy, because right now fear and greed is telling me that you need to go and buy this stuff, but you need to practice really good risk management. And that is not financial advice. This is just what I'm going to be doing, because anything can happen over the upcoming days with oil prices, with the Trump-Russia meeting, with another escalation in the Middle East, with our government remaining shut down for a longer or an extended period of time. There's just too much uncertainty to be playing big risk right now, which is why I don't think this is a bad time to add to a position, but you have to be very cautious and arguably have a very tight stop. So if you're looking to learn how to place tight stops and exactly what ranges to place stops so you don't get stopped out and then the market moves in the direction you initially thought it would, because this happens all the time, then I'd love for you to join in on my Tuesday technical analysis calls. I host them every single Tuesday live with all of our community members, and we have tons of different calls that we're hosting Monday through Thursday every single week, again live with all of our university members. We consistently have a major portion of our members with high retention sticking around, paying us $97 a month, because they get access to everything from a library of tools, training, resources, courses. Our experts are constantly sharing altcoin picks, technical analysis stuff, DeFi yields, airdrops, answering questions, and helping you reach your crypto goals through the end of the year. And many of you are already sitting on crypto. You're just not putting it to work for you. And our very own expert Mo always shares a new weekly yield pick. I like to call it a DeFi yield quick win, where you can basically take about 15 minutes once per week using the tutorials and information and the yields that are very safe and effective at helping you earn a yield on crypto. In this case, you could put Ethereum to work in order to earn 100% APR. In other words, about $1,200 would earn you enough in this pool in a year in order to pay for your membership, which makes everything else a smooth and free ride. Now, he is very clear that sometimes you don't want to deposit too much, other times it's very safe. He shares with you the ranges, and he even shows you video tutorials on how to do this stuff. So if that sounds interesting to you and you want access to our consistently growing library of tutorials when it comes to strategies and DeFi and the how-tos, then head on over to altcoinpro.com. You won't regret it. If anything, you have 14 days to make a decision to get a refund. But we're so confident we can help you to reach your crypto goals, and that we're the best platform on planet Earth, that you truly have nothing to lose by checking it out. Thanks so much for watching this video, my friend. If you enjoyed it, be sure to subscribe to the channel, and I will see you in the next video. Goodbye.